Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's January 7th. This will be our chart lesson for the day. And it was mostly, well, really it's mostly sideways, although we spent um, most of the early morning trending up. But for the most, really, this is a sideways day. We really couldn't get much above this was the close from yesterday, and of course we opened right here, so there was a gap between there, and we traded down first. So generally those gaps are going to get filled on the same day. So when we started trading up here, until this thing starts trending lower again, you had to assume this was probably our first target. And you can see once we reached that target, we sold off from there back down into about the middle of the trading range that we had today, and sideways again. So we did have a two-tier channel working up, and early on we were finishing up a trend on the way down. So it was down early, but within 15 or 20 minutes of the regular session open, we trended up all the way into about a little after 10 o'clock. And then I just say it was sideways from there. We had a little bit of sell off from that, filling that gap, and then it was just sideways. So it was not a lot happening today, although there are a lot of trades here. Unfortunately, on this trend down, you'll see most of my arrows are green. I just didn't get any really good signal bars. It was one of those days, and if I did get a good signal bar, the trade had some other issues with it, which we'll talk about. Um, Hopefully some of you didn't have the same thing. I did want to talk about, I got at least two different emails about how I found this channel right here this morning. And generally, most of the time, you're always going to start off the swing high or the swing low, like right here. And so if you start from up here today and you work down, you got, there's your first two swings, then that one, then that one, then that one. And if you use that one probably fits the best coming off the high. And if you use that one, you get the same exact outcome. So generally, that's the way I would have played it. But if you take that, let me just make this a little bigger or something here so it's easier to see. But if you take that trend line right there and you move it down to the low side, it doesn't fit very well. It does off those first two swings, but then we keep coming up short and it's turning. So what I did was I just took this trend line, and you had more price action off the lows here at the time, and I made it fit off the lows, and then I drug it up. And if you generally I'll drag it all the way to the top, but it didn't fit right up there. That's where it fit the best, right in there. And so that's how I got that channel today. If it's not fitting neatly on both sides, your channel is suspect. It should always match. Just let's see how this one pretty much matches perfect. It's turning prices off the highs every time, and then it turns prices off the lows until you get a break. And even when it comes back up on the retest, it still turns down off those highs right there. So that's how sometimes it's easy to get them off the low versus off the high. And so that's how I came up with that. And but 99% of the time, I would say you're going to start off the high and use your first swing, and that's going to be one of these couple of swings right in here, probably that one. And there is a short-term little, you can see that little short-term trend right there, and then a break and two legs down, and then your correction, and you get the next one. You can see my little short-term trend line in there too. But for the bigger picture, usually it's going to be something like this. So, but if you use that one, using that as your first swing, it matches up here, and you really get the same exact outcome. You still get your break down here at the same place and your new low, and so it doesn't really change anything. But this is how it fit the best today. You can see prices are pretty much turning off that low side of the channel, and they're turning off the high side every time, and it fits real nicely. So that's how I came up with that. But let me back out a little bit here. We'll go through the trades, and you'll see how my trades kind of set up today. 7 o'clock came right on this bounce back here to the trend line. And again, it doesn't matter how you drew it, really. It's still two legs back to the EMA and the trend line. And this is really your signal bar. That's your first bar. But when you make two bar matching high, you can use the next one as your signal bar. But look how big that is, and you got to go short right into all those lows. So again, it's not a very good one. What you might do is use this for your signal bar, let it break lower, and drop a limit order back far enough that you could still get out here, scalp out. And generally what I'd probably do is put it one tick below that bar, maybe right even with that bar, and seeing if prices will come back. And sure enough, they would have come back right here and filled you. But even then, you could have waited on this one. It actually broke higher and turned and went out the other side. And being off that key entry point, I'd just go ahead and have a sell stop right there and let it turn on back down. If it, once it broke higher, then turn back down. Or you could wait on this one and let it break lower and drop a limit order, maybe a couple of ticks back. You still would have plenty of room. The problem is you got that support across there. And it's just a little dangerous going short into all that support. Although that is a strong key entry point, this turn prices every time. And this is a little bit of a breakout pullback short there. So just depends on how you want to play. I made them both green. They're a little bit aggressive. They're not perfect setups by any means. And then you come down here and you just start kind of going sideways, working back over to the trend line again. And once again, notice you got a new low though, first entry, second entry, and these are matching highs. So you could use this for your signal bar, but it's almost a repeat pattern, just at a much smaller level. You're going short right into all that support, but it is a repeat pattern. It is off the key entry point. It is a second entry. There's a little bit of congestion across there. So again, it's a little bit aggressive. You may want to risk it. I made it green again. And so we've got all that good move down through there, and I hadn't really had what I'd call an ideal setup yet. Then finally you get a break here, and even this one was real close to being green. But that's been a pretty nice trend down, and that's your first break, and you're a little bit away from the EMA. And notice that low, first entry, and you're coming up. There's a second entry short right there. A lot of times you'll be better off to wait on a break and attempt to a new high, but I hadn't had a really good trade yet, and this one is real close, so I'd go ahead and, I like that trade, and it was one of the trades I took. So what you might do here, actually what I did here is, this is more of an inside bar, but it's got a little higher low, so I use that for my sell stop. Even though that's your signal bar, your stop would have to go above that. So when we broke lower right there, I like to go in short. And you might even let it break lower and drop a limit order a tick or so up, just to see if it'd back up. But if it would have backed up and got you maybe a tick into that, you might have gotten filled. But if you have enough room to get out before the EMA, I wouldn't even do that. I wouldn't take a chance of a limit order, because you may miss this trade. You can see this turned out to be a pretty nice trade. That long of a trend, you're going to at least get a retest of that low, or attempt to go lower, even if you don't really get that low. Just like we did here, we tried to go lower twice, and we didn't quite make it, but we took off again. And that's just on this shorter term trend line. But on the bigger picture, we had this trend channel, the break, a new low, and then we just kind of reversed up through here. So anyway, I like that trade. It's the second entry short. It's the first break of a fairly strong trend coming down. And again, this trend line's a little bit concerning, going short right into it. But we're a little bit away from the EMA there, and we hadn't been getting, that's the first time we've even gotten above the EMA since way up here. And so we're probably going to make a new low there. And another thing I look at this support. I didn't draw my line across, but I treated that like a little failed break higher too. And you could have called this a lower high and gone short right there. It didn't break higher, but that still would be a lower high after this failed breakout. I would have preferred, if it would have broke higher and then turned down, I'd say go short there. And you could probably argue for that one to be green anyway. Especially if you're looking at that like a failed breakout, which it is, because that we had that support coming across there. Generally, you'd prefer for that to come back through the EMA and come back and test that from underneath. So that's the reason I didn't mark that one earlier, but you could still argue for that one. Then we run on down, and then you got a little breakout pull back here. And again, this one is real close. You could argue for this to be red. If it was just a first touch from the underside, I'd say no, because you may get a failure here and bounce back up. But when it gives it that little double test and gives you that bearish bar, when it breaks lower there, just have a sell stop there. And I marked it green, but this is a failed second entry long. Notice you're coming down a new high and you try to go higher once, twice. It's a double test after a breakout. What was support is now acting as resistance, and you tested it twice. So you're probably going to go on lower. Again, I marked it green. Just, early on I had all these setups, but they just weren't perfect setups. I wasn't really getting that. And the reason this one was, you didn't have much room to get out right there. So again, you might have let this one break lower and then dropped a limit order a tick or so higher. You probably would have missed this trade if you did, though. It actually comes back here and turns down again, but then you're running into the same issue here and you're getting further and further away from the EMA. So, it's just too late to enter down here. And now I'm looking for a reversal, because you had your main channel coming down, you got your break, and you got at least 2 legs to a new low, and now you got a higher low here. And that's a nice, that bar opened here and was trading way down here, and before it was over, it closed all the way back up on its very high. That takes a lot of strength to do that. We are still below the EMA, so again, it's not perfect, so I marked it green. I just couldn't get a good setup today. So again, even though I like that, I would have preferred it to be on the other side of the EMA. But you may take that, because we're looking for a reversal. It's a higher low, and that's a very impressive bar right there. At a minimum, you'll probably get a measured leg up. And so if you measure that right there and you look for a measured leg, you can see we actually got a little more than a measured leg. And you had more than enough room to get out. And then you try to go short again, lower again. So now you got a failed second entry short, and it did push through the EMA that time. This is not a very good signal bar, but there's 3 matching lows across there. That's a double test, and we're looking for a reversal. That's probably going to trap some people to the short side, and if it starts going higher here, they're probably going to have to exit, and it's probably going to run up. You don't know that it's going to run up that far, but I would expect it to at least run back up and make another high here, or test this high anyway. And this thing just keeps going. And really here we're just working sideways. It looks like there's a possible trend line here, but we don't have enough confirmation. This is just too sideways here. So you're better off just to stay out of all that. And then finally it comes back and it does confirm that trend line, gives you that third touch. And again, you get this bar that opens here and trades way down here and then turns back up and closes way back up here at the very high again. Very similar to this right here. Also, there's a few touches across there. But the main thing is it confirms that trend line. I'm going to go long right there, and that's a quick, easy move back up to the other side. And then we come down and we get our first break. But we're probably we still haven't filled that gap, and we may try to make a new high here, because that's the first break of this 2-tiered channel. And so notice that low, and then you get a first entry, a second entry, it fails. So if it breaks up above that, I want to go long with it, because that's a reversal type pattern. And we don't care what the signal bar looks like on a reversal pattern. Usually I'm very picky about the signal bar, but on a reversal pattern, not so much. And then you get a little breakout pullback long, but again, it's right off that trend line. This is, again, this is not a really good setup here, but it traded up, and when it breaks above that, I like using this for a signal bar because of those 3 matching highs. Let it break higher and drop a limit order and see if it'll come back and bounce off that trend line and continue higher, which it does. This one's real close to being green as well, but notice how it's bouncing off that trend line each time. If this one holds off that trend line and it goes higher from there, which it did, so if it goes higher from there, we're probably back inside the trend and going higher. And plus you've got this shorter term trend line off the break down here working higher. You can see it playing all the way up. And again, you don't know this for sure that it's going to go up here. All we're looking as far as a new high, but this thing runs all the way up and goes ahead and fills that gap. This was the gap closed from yesterday, so reaching that fills the gap. And ironically, that's the high of the day. From that point on, we traded lower after that. So prices, that was their entire goal here, was to fill that gap. That's what they were trying to do. And there's a couple legs up here. Measure that one. And so when we started higher here, look for a measured move, and you can see we got a little higher than that. But this thing does run on up, and you get a break, a move to a new high, and that's a nice signal bar right there. It's a relatively big one, so you might let prices break lower and drop a limit order back up one tick below that bar right there, and it would have come back and filled you, and then off it goes. And that was a good move too. And I'd probably try to pick up a runner here just in case. And sure enough, you could have ridden that one all the way down. That was a really good trade there. Then we find support off this line again here, where we've bounced several times here. We do get a close outside of this trend line, a new low. We run up, but we would have expected this to go higher, and it doesn't. But to try to go, if you look, there's multiple matching lows right there. And so anyway, you made that low, you got a double test, and then you actually had a little failed break lower that turns up. You try to go that short, that low that many times and fail, you're going to go higher. So it's not a great signal bar though, but it's probably going to trap some people if it breaks higher here. And so you may take that one just simply because it's a double test of that. You basically had a double bottom right there, and it's then you got a double test of that, and off it goes. And really the main reason I like this one is that one little tick lower, that little failed break lower. And you may catch an important low right there. Just like here, you may catch an important high, but it runs up, you get a close outside, moves to a new high, and then sells off. And here again, notice you made that high, and you test it once, you test it twice, and notice how we're closing inside that line every time. I like going short, and that's a second entry short basically. Notice that low, and you go first entry. There's actually a little jog right here, but that's still on a bigger picture. That's still a second entry. And nice signal bar, bearish signal bar. And you're still a little away from the EMA too. And it runs all the way back down. And this looks like a little failed break lower here too, but that wasn't a very good signal bar. So I'm going to wait on a higher low, which comes here. And again, I made this one green because it's not a perfect setup. You really would like to see a failed second entry short or a second entry long here. Actually, you could call this a second entry long because there's a new high and you get a first entry, second entry. But I'd really like to see it try to go lower one more time, especially this late in the day. You know, the market tends to move in twos, so you like to see that double test or double failure or whatever. And we didn't get that here, but I still like that setup. It's a higher low, and we're back inside. Look how many times we bounced across there. So I still like that setup. And you can, you know, your expectation is just to go to here, but if you held a runner here, you could ride this all the way up. And I would just, the way I would play this is I'd draw my trend line up through here. There's probably, it looks like there could be one right here, but it doesn't really fit well there. So I'm going to move it over here and go from here. It looks like it's probably even more of a spiking channel. Now it's fitting really well right there. And if you copy that and move it over, you see how well it fits on the other side. And that's the way you want it to look. And that's how I play with my trend lines till I get it right. And that's correct right there, because you can see it bouncing off the low. Notice how it even closes. You know, even though it might have pushed through that trend line right there, it closes right at it. And you don't see anything really poking out either side. It looks, that's a perfect little trend channel right there. So that's the way I would draw that one. And somebody will ask me, well, why didn't you start here or down here? Because it didn't fit well down there. This was actually the little trend right here. And this is a, you know, drawing trend lines is a skill, and you'll get better and better at it. And you don't have to be 100% accurate. You got to be close, and you got to be in the right. Just like I showed you on this first one over here. Even if you'd have drawn this off the high and right there, it still captures the same price action basically. Um, but I want mine to fit really well. And even this one was a little bit questionable because it poked through right here. But notice how it poked through on the other side, and that's what you generally expect to see, an equal amount. And so I still think this is correct right here. And somebody else drew this as a spike in channel. I want to say they dropped it in right here, and then they drew like so or something like that. I couldn't get mine to look exactly like theirs did, but they drew theirs more like this, and they looked at it like a spike in channel. But again, I think you still end up at the same place. You still basically get your break right here in your new low. So again, you can see it a couple of different ways, but you can't be totally wrong. And sometimes people will be totally wrong. And if your price action doesn't fit on both sides, see how that fits on both sides all the way up through there till you get a break and a new high. Same thing here. If I copy this one, move it over, look how neatly prices fit in there. They bounce off the trend line on both sides and all the way up and down. And so then you got it right. So just like we talked about that one right there. And then we could go over to this one right here. Same thing. Notice how prices are bouncing or turning down off that main trend line. And this particular one, you get an overshoot here. And then you get a break and it moves on down. But you can still see how prices are fitting in there until you get that overshoot. And you'll see that. And generally you'll get a break soon thereafter, and you got a break, but it just dropped on down. We got into the next day. We actually where we closed right there. So this is next day's price action. But anyway, a lot of trades today, although a lot of them were iffy trades, but there were still plenty of good trades with some runners today. So it looks like we're probably going to, looks like we got a leg down, a correction, and we may work on another leg down here now. I would call that my first leg. And then we've been working lower from right there ever since. So we may drop on down there. We may make that target. We may not. We're into the next trading day. But generally, you'll still see prices probably run on down there and test this low. And you'll have two-legged correction. And there's really two legs in there that I showed you earlier. So the market moves in twos. And that's why we look for these measured legs, and it's why we do second entries. And all a second entry is two legs. And sometimes that helps take some of the confusion out for people, but you're just looking for two legs and of correction, and then the trend starts back again, or the move starts back again. So anyway, I think that's going to do it for today. So I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.